Banana Zone phase 2 is going to be so big. This is Sui, right? So since the start of that, we're still up 670% on the start of that. But no, you need to have quality assets. So this is others excluding the top 10. We're still miles away from breaking out. And that's because you've got a bad asset allocation. This one, that did fine. Where's the banana? Why is my bag not going up? And you're sitting on, I don't know, some useless meme coin that you're hoping is going to save you. And it's unlikely to. Keep it major projects, big, 10% into. You think, oh, no, I need that 100x. I've got to have the 100x. I'm never going to do this. And you actually, what you get is 100% loss, and everything else has gone up 20x. And you're poor. Here's total global liquidity. We're pretty much at all-time highs as liquidity is growing at 8% a year. That is the liquidity we think of because we're crypto people or technology investors. We think of this as great. For everybody else, including for your income, this is debasement of currency. Analyzed growth rate of global liquidity plus 3% inflation. That's 11%. Your future self is getting poorer. This is the game we're in. This is why we're taking absurd, irresponsibly long risks in technology and crypto.
Raoul Pal, co-founder of Real Vision, sparked debate after sharing his thesis on the current market cycle. According to him, Ethereum is expected to outperform Bitcoin, while Solana could outperform it, and even Sui could overtake it, thanks to its adoption curve. On August 25th, Paul presented his predictions for the entire market cycle. His overall thesis is that Ethereum will outperform Bitcoin, Solana will outperform Ethereum, and Sui will outperform Solana due to their respective positions on the network's adoption curve. This thesis, which considers blockchain growth according to an S-shaped model, implies that newer networks like Solana and Sui have more room to grow relative to their size. This thesis was formulated in response to investor Chris Bernisk, who previously noted that Solana Ethereum and Solana Bitcoin pairs continue to perform well, adding that he expects this trend to strengthen given the recent negative sentiment towards Solana. According to Raoul Pal, you can get an easy 20x if you focus on Sui and Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
We have a single macro variable that explains 90% of the price action of every major asset. That makes it the easiest macro risk-taking opportunity of all time because everything else is noise. Everything is just wiggles. You see the wiggles. These are wiggles. It's just noise. Wiggles. It's all noise because this is the trend. You just need to understand liquidity and then you understand the directionality. And if you're caring about the next 3 weeks, the next day, the next month, you are doing this wrong. You're trying to follow people on Twitter who are trading and not investing, and they won't make the money. Honestly, it sounds like they do. They show their wallets. I made 100x in this trade. Most of those people don't make any money whatsoever. In fact, they just try and sell a newsletter. He says laughingly, having done Global Macro Investor for 20 years, but hey, it's the best performing and proven newsletter of all time.
Are we witnessing a repeat of history in the cryptocurrency markets? According to Paul, the answer is a resounding yes, with potentially significant implications for the duration of the current bull cycle. This analysis suggests that the promising upward trajectory we've seen is only just beginning, which could delay the peak much longer than many initially anticipated. The current cryptocurrency market cycle bears an eerily similar resemblance to the now legendary 2017 bull cycle. This comparison is not one made lightly. 2017 was a period of explosive growth that captured global attention and propelled Bitcoin and altcoins to popularity. Paul's observation isn't based solely on price action, although chart patterns can provide clues. His analysis goes deeper, incorporating macroeconomic factors that he believes influence market behavior and could broaden its horizon. Another important factor cited by Raoul Pal is the weakening US dollar. The strength or weakness of the US dollar often has an inverse relationship with the risk assets, such as commodities, emerging markets, and cryptocurrencies. A weaker dollar can make dollar-denominated assets relatively less attractive and encourage investors to shift to alternatives perceived as safe havens or with growth potential. The cryptocurrency market may be in a holding pattern ahead of the next phase of price discovery, a development that could spur institutional capital to extend the historical 4-year cycle, according to industry observers. While the cryptocurrency market awaits its next catalyst, the liquidity dynamics of the slow business cycle could extend the traditional 4-year cycle into the first or second quarter of 2026, according to Paul. Many key elements of the crypto ecosystem are in a holding pattern ready for launch. We must learn to be patient. The path is clear, but we should never expect absolute perfection. Meanwhile, stablecoin flows on Binance have surpassed $1.65 billion, which could be seen as a harbinger of renewed investment in cryptocurrencies, as they are the primary funding tools for traders. Some of the crypto market's leading altcoins are preparing to leave the waiting room for the final parabolic phase of the rally, with the Solana token being the next to fall. Paul wrote, sharing the chart below. This chart features an ascending triangle pattern, perceived by technical traders as a bullish continuation pattern, signaling a potential price breakout. Following this confirmation, Paul predicts that after Solana, Sui will be the next altcoin to gain momentum, followed by Dogecoin. Once the larger cryptocurrencies outside the top 10, also categorized as other, begin to recover. Meanwhile, the XRP token is booming. While the launch of larger altcoins outside the top 10 could take longer, 2 months ago, Paul claimed that the current cryptocurrency market cycle mirrored similar trends to 2017, when Bitcoin's price rose more than 1,255% over the course of the year. Paul claims that digital assets are on track to reach 4 billion users by the end of the decade. He draws on historical comparisons. While the internet had just surpassed the 5 million user mark, its adoption grew steadily to reach 187 million in 2000. Cryptocurrencies, on the other hand, have already far exceeded this pace. By the end of 2024, more than 650 million people were using cryptocurrencies, a number more than double the initial growth of the internet. If adoption continues to grow, Paul claims the asset class could reach a staggering valuation of $100 trillion by 2032, rivaling the combined market capitalization of current global equities. He identifies two forces behind this projection: the erosion of fiat currencies due to their continued depreciation and the inescapable dynamics of online adoption. Together, these factors could, he argues, transform the financial system. While Paul anticipates billions of people joining the ecosystem, more cautious industry studies offer differing estimates. AAA suggested that there would be around 560 million cryptocurrency users by the end of 2024, while Anderson Horowitz estimated the number of regular monthly users at between 30 and 60 million. However, both studies confirm that the user base is growing.